Section A, external financial reporting decisions. That is 15% of your exam, and we are going to discuss about financial statements. Objectives of financial reporting, which has 9 MCQ. Let us begin with the objectives of financial reporting. A primary objective of external financial reporting is direct measurement of the value of the business enterprise. Financial reporting is not designed to measure the value of the business enterprise. Establishment of rules for accruing liabilities. This is done by GAAP and IFRS. Direct measurement of the enterprise stock price. Objectives of financial reporting are unrelated to the measurement of the stock price. So, a primary objective of external financial reporting is provision of information that is useful to present and potential investors, creditors, and others in making rational financial decisions regarding the enterprise. Next, what is the primary objective of financial reporting? To provide economic information that is comprehensible to all users? No. Financial reports are prepared for users who have reasonable knowledge of business and economic activities, not to all users. To provide management with an accurate evaluation of their financial performance, it is not to the management, it is to external investors and creditors, not to the management. To provide forecast for future cash flows and financial performance. This is one of the objectives of financial reporting. But here the MCQ is asking about the primary objective of financial reporting. So the primary objective of financial reporting is to provide information that is useful for economic decision making. Next, an objective of financial reporting is assessing the adequacy of internal control. Assessing the adequacy of internal control is the function of internal auditing. Evaluating management results compared with the standards. You are evaluating the management results and you are comparing with the standards. This is done by budgeting. Providing information in compliance with established procedure. This is also done by internal auditing. So the correct option is that providing information useful to investors, creditors, and donors and other users for decision making. This is the objectives of financial reporting. Next. Which of the following is a true statement about the objective of general purpose financial reporting? Financial reporting is ordinarily focused on industries rather than individual entities. No. It is focused on industries plus it is focused on individual entities as well. The objective applies only to information that is useful to investment professionals. No. There are various stakeholders, not only to investment professionals. Financial reporting directly measures the management performance. No, it indirectly measures the management performance indirectly. The information provided relates to an entity's economic resource and claims. Economic resources are your assets and claims are your liabilities. So, this is a true statement about the objective of general purpose financial reporting, that the information that is provided in the general purpose financial reporting, it relates to your economic resource and claims, which is your balance sheet. Next. Which one of the following is least likely to be accomplished by providing general purpose financial information useful for making decisions about providing resource to an entity? Here the question is being asked for which are not the objective of financial reporting. which are not the objective of financial reporting. To provide information about changes in entities' economic resource and claims to them. Economic resource are your assets and claims are your liabilities. So to provide information about changes in the entity's economic resource and claims to them, yes, this is one of the objectives of financial reporting. To provide information to help investors, creditors assess the amount, timing and uncertainty of prospective net cash inflows to the entity. This is one of the objectives of financial reporting. To provide sufficient information to determine the value of the entity. This is the incorrect option. This is not one of the objectives of financial reporting. So for this MCQ, this is the correct option. To provide sufficient information to determine the value of the entity. We cannot determine the value of the entity because entity's performance is affected by many factors other than management. We have external factors as well as, and we use certain estimates and judgments. We report historical concept. We use historical concepts, and we use certain estimates and judgments. Certain estimates and judgments. That's why we cannot find the value of the entity. To provide information about management performance years. The financial statements provide indirect information about management's performance. So this option is correct. The incorrect option is that it will not provide you the sufficient information to determine the value of the entity because we use historical concepts, we use certain estimates and judgments. So that's why this is incorrect option, and for this MCQ, this is the correct option. Next, all of the following supports the objectives of financial reporting except providing information that. Here also the question is asking for which are not the objectives of financial reporting. So here also the question is being asked for which are not the objectives of financial reporting. Is useful for making investment and career decisions? Yes. This is one of the objectives of financial reporting, that it's useful for us to make investment and career decisions. Concerns enterprise resource and claims to those resources. Enterprise resource are your assets and claims to them are your liabilities. So this is one of the objectives of financial reporting, that it concerns enterprise resources and claims to those resources. Help investors and creditors predict future cash flows. This is one of the objectives of financial reporting, that it helps investors and creditors predict future cash flows. But this is not one of the objectives of financial reporting, that it helps management to evaluate alternative projects. This is basically done by capital budgeting. This is not the objectives of financial reporting. It is done by capital budgeting. So, which are not the objectives of financial reporting is helps management to evaluate alternative projects. Next. For financial reporting to be useful, it must be in accordance with generally accepted accounting principles. No, there are circumstances that may permit departure from GAAP. So it does not that the general purpose or external financial reporting should be in accordance with generally accepted accounting principles, because circumstances may permit departure from GAAP. Be understandable to those who have limited knowledge of business activities. No, we need some knowledge, who are willing to put some effort to understand. not delimited knowledge. We need some financial knowledge to understand what is there in the financial reports, not limited knowledge. Directly measure the value of the being reported on. Directly measure the value of the entity being reported on. You cannot find the value of the entity because we use historical concepts and we don't use fair value. For example, historical concept means property, plant and equipment, they are recorded at historical cost, and we use certain estimates and judgments, and these are the limitations of financial statements. That's why we cannot find the value of the entity. Now, some knowledge is required. Circumstances may permit departure from GAAP. So, for financial reporting to be useful, it must provide information useful for making business and investment decisions. This is the correct option. Next subtopic is users of financial information. Users of financial information can be categorized into two groups. We have internal users and we have external users. We have internal users and we have external users. Now, general purpose external financial reporting of a corporation focuses primarily on the needs of which of the following users. So first, let us classify the users are internal users and external users. Regulatory and taxing authorities, they are external users. Investors, creditors and their advisors are external users. The board of directors of a corporation, they are internal users. The management of the corporation is internal users. So the primary users are in external users and they are investors and creditors. They are investors and creditors. These two users are the primary users. So investors and creditors and their advisors are the primary users. Next, the financial statements included in the annual report to the shareholders are least useful to which one of the following? The financial statements included in the annual report to the shareholders are least useful to which one of the following? They are least useful to internal users. They are least useful to internal users because internal users uses management accounting, so they don't rely on financial reports. So let us classify these users as internal and external users. A stockbrokers is external user. Bankers preparing to lend money is external users. Competing businesses is external users. Managers in charge of operating activities, they are internal users and they are least useful to internal users, which is the correct option because they use management accounting and they are in day-to-day activities. So that's why it's least useful to internal users, and here the managers and here the manager is the internal user.